The Indian government is about to write a 46,000 crore rupees cheeky. That's roughly $5 billion. And if you run any kind of business, you actually need to know what it's for. This is Mobile PLI 2.0. PLI stands for Production-Linked Incentive. And the simplest way to understand it is this. It's a cashback scheme, but for manufacturers. You know how your credit card throws you 5% back on purchases just to keep you swiping? Same idea. The government hands manufacturers a percentage of their increased sales back as a reward. The more you produce in India, the bigger your payout. Pretty clean incentive design, honestly. Now, this isn't round one. The original PLI scheme kicked off back in 2020, and it genuinely crushed its own targets. India exported 6.2 lakh crore rupees worth of mobile phones by February 2026. That's 27% above what the government originally aimed for. In 2025 alone, exports hit 2.62 lakh crore rupees, which is around $28 billion. Apple's contract manufacturers basically planted a flag in India and went big. So if the first scheme worked this well, why are we doing it again? Because the new target is to double mobile exports from India. And if you look at this trend line, it has only gone one direction, up. For you as a business owner or entrepreneur, this isn't just macro noise. Large-scale manufacturing doesn't show up alone. It drags an entire ecosystem with it. Suppliers, logistics, services, industrial clusters. The stone is already in the water. In the next module, we break down exactly who's sitting in the path of those ripples and who might get left behind. So the policy is set, the money is on the table. But who actually walks away richer and who quietly gets the short end of the stick? Let's get into it. The clearest winners? Mobile manufacturers and assemblers. Foxconn. Dixon Technologies, Bhagwati. These guys get direct cash incentives tied to how much they produce and export. More output, more government cashback. Simple as that. So expect serious CapEx ramp-ups. That means factories, equipment, the whole expansion playbook. But here is where it gets interesting. Component and PCB suppliers. Think Surma SGS and Amber Enterprises. They win too, almost by default. Because to qualify for PLI incentives, manufacturers have to source a chunk of their components locally. So as assembly scales up, demand for Indian-made parts spikes hard. It is basically the McDonald's effect. When the chain expands, the potato farmers and packaging guys all eat too. Now, on the market side, our trend analysis shows electronics and ancillary stocks on a clear upward trajectory as investors price in higher orders and export revenues. Semiconductor players under the India Semiconductor Mission are watching this space very closely. One caveat though. Bond yields could face upward pressure if this fiscal stimulus pushes inflation expectations higher, which makes long-duration debt funds a bit of a bumpy ride near term. And the losers? Smaller domestic handset brands get squeezed out by heavily subsidized, large-scale competition. And at the macro level, a 46,000 crore rupees outlay means fewer resources sitting around for social schemes or non-PLI infrastructure. It is a deliberate policy bet. And not every sector gets a seat at the winning table. So we know who wins, who loses, and what the market is already pricing in. Next up. What does this actually mean for India's bigger export ambition, and can PLI 2.0 really deliver on that promise? So what does all of this actually mean for you? Let's zoom out and look at the bigger picture. Jobs, growth, and where the real opportunities are hiding. Start with the employment story, because it's a little awkward. The original PLI scheme created 1.85 lakh jobs. Sounds great, right? Except the target was 2 lakh. That's an 8% shortfall. And that gap is telling you something important. Electronics manufacturing is increasingly automated. You can hit record export numbers without creating record jobs. So PLI 2.0 is going to have to get smarter. Think more labor-intensive component work, not just final assembly lines humming away with minimal headcount. Now here's where it gets interesting for everyone else. Think of 46,000 crore rupees being thrown into one sector like a stone into a pond. The ripples don't stop at the factory gate. Logistics, packaging, software, canteen operators near industrial zones, local real estate. Everything feels it. That's your economic multiplier effect in action. And if you're an entrepreneur or freelancer, the goldmine isn't the factory itself. It's the ancillary ecosystem around it. global OEMs, companies that design products but outsource manufacturing, are putting down deeper roots in India. They need local vendors for precision tooling, compliance consulting, workforce training, the works. India's mobile manufacturing story is genuinely just getting started, and the businesses that get inside the supply chain now, rather than watching from the outside, are the ones that ride this wave. So the real question worth sitting with is, where does your business fit in? Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.